Welcome back to our channel where we delve into the dynamic world of finance. Today, we're taking a deep dive into the fundamental principles of stock market investing. Whether you're a novice or a seasoned investor, understanding the basics is essential for building a strong foundation in the stock market. But before we dive into the nitty-gritty, don't forget to hit that subscribe button and ring the notification bell to stay updated on all our latest videos. Let's start with the basics. What exactly is the stock market? At its core, the stock market is a marketplace where buyers and sellers come together to trade shares of publicly listed companies. When you buy a stock, you're essentially purchasing a small piece of ownership or equity in that company. The stock market plays a vital role in the economy by facilitating capital formation, allowing companies to raise funds for growth and expansion. It also provides investors with the opportunity to participate in the success of these companies by owning shares of their stock. So, how does the stock market actually work? It operates through exchanges such as the New York Stock Exchange, NYSE, or the Nasdaq, where buyers and sellers place orders to buy or sell shares of a company. When you buy a stock, you're contributing to the demand for that company's shares, which can influence its price. Conversely, when you sell a stock, you're adding to the supply, which can impact its value as well. There are different types of stocks you can invest in, each with its own unique characteristics and risk profiles. Let's explore a few of the most common types. Blue chip stocks. These are shares of well-established companies with a history of stable earnings and dividends. They're considered less risky but offer lower growth potential. Growth stocks. These belong to companies with high growth potential, often in emerging industries or with innovative products or services. While they offer the potential for substantial returns, they can also be more volatile. Value stocks. These are shares of companies that are trading at a lower price relative to their fundamentals, such as earnings or book value. They're typically seen as undervalued by the market and may present buying opportunities for investors. Understanding the different types of stocks can help you build a diversified portfolio that balances risk and reward based on your investment goals and risk tolerance. Now that you have a better understanding of the stock market, let's talk about how to start investing. The first step is to open a brokerage account, which serves as a platform for buying and selling stocks. There are many online brokerages available, offering a range of services and features to suit your needs. Do your research and choose a brokerage that aligns with your investment strategy and preferences. Once you've opened your brokerage account, the next step is to research and select the stocks you want to invest in. This involves analyzing the company's financials, growth prospects, competitive position, and industry trends. There are various resources available to help you conduct research, including financial websites, analyst reports, and company filings. Take the time to thoroughly evaluate each investment opportunity before making any decisions. It's essential to understand that investing in the stock market comes with risks. Stock prices can be volatile and influenced by various factors such as economic conditions, market sentiment, and company-specific news. To mitigate risk, it's crucial to diversify your portfolio by investing in a mix of different stocks across various industries and sectors. This helps spread out your risk and minimize the impact of any single stock's performance on your overall portfolio. Finally, it's essential to adopt a long-term mindset when investing in the stock market. While it can be tempting to try to time the market or chase short-term gains, successful investing is about patience, discipline, and staying focused on your long-term goals. Remember, the stock market is a marathon, not a sprint. Stay informed, stay disciplined, and stay focused on your investment strategy, and you'll be well on your way to building wealth over time. And there you have it, an introduction to stock market investing. We've covered a lot of ground today, but remember, this is just the beginning of your journey as an investor. If you found this video helpful, be sure to give it a thumbs up and share it with your friends. And don't forget to subscribe to our channel for more informative content on finance and investing. Thanks for watching, and until next time, happy investing.